The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Looking good, Billy Ray, feeling good, Lewis, and we have none other than Randolph Duke on the line, also known as Rich Anderson. Rich, how are you doing?
Doing great, Larry. Doing great. It's kind of a wild time, you know.
Wild time, Rich. I've known you for 47 years, and I can honestly say I haven't seen anything this nuts since the top in the 2000 in the dot-com stuff. I mean, look at the Dow goes up 400 points and the S&P drops 40 handles. I mean, when you see something like that, I mean, it's just incredible.
That has to do with the inflation expectations. You know, the 10-year inflation break-even set an 8-year record yesterday at 2.47 something.
Wow.
Not that I know anything about stocks or interest rates, but
I understand.
Just saying.
Yeah. Also, what about the story? How can bonds be going up when we've got inflation numbers like this and all the money that's being printed through this? So do you talk to any of your friends about what's going on with that? I mean, it doesn't make any economic sense from the way I look at things.
Right, but if the Fed is buying all the bonds, they can set whatever price they want.
Yeah, that's true. Right. Yeah, that's true.
Yeah, and in Japan, as an example, I think the government now controls like 85 or 90% of their debt. So you can't go short that market because you're going short against their bank. Against their central bank. You can't go short against the Fed central bank either. So that's why that's going on. I had a friend ask me yesterday, well, maybe we should sell bonds. I said, well, I'm not going to fade the Fed.
I'm not going to do that either. Rich, we had a breakout in gold today. We cleared the 1799 level. We promptly went up to 1817. That's a pretty big move in gold for a couple of days here. But someone asked me, would I buy that breakout above 1799? And I said, Gann said if it hit it 3 times, when it goes through the next time, it's for real. And boy, that's exactly what happened this morning. There were virtually just an incredible amount of buying between 1801 and 1810. It just went like a rocket.
Right. The Gann's rule was the 4th time through is what you're referring to there. Yeah. And our good old friend John Hill, would say that if you have range expansion like we seem to be having today, he called that his yum-yum trades, Remember the yum-yums?
Oh, yes. Yeah, I sure do. Yes.
And anyway, you look for the range expansion and we're getting the range expansion today, so on any little dips, it's probably an interesting situation. But you have to manage your risk. I mean, these markets flying all around. You establish your risk and then see what can happen. And sometimes it goes a lot further than you think. The grain markets, of course, is what I thought you wanted to talk about.
No, that's what I do want to talk about.
The key thing there is next Wednesday there's a crop report. And
now,
as some of your listeners have experienced, crop reports can give you curveballs, let me tell you. And as your old friend Bill Gary said, we ain't seen nothing yet. I mean, I've been emphasizing how we have little margin for error. And now all of a sudden, the area, the 2 states where the most acres of increase in corn are South Dakota and North Dakota, and we've got serious weather concerns about those areas now, just as we do about Brazil. And the report that comes out in May, next Wednesday, will tell the amount of acre or the yield that they think they're going to estimate. But the last 2 years, our yield has been way below, and the analog year that we're kind of looking at is 2012. Well, in 2012, the bushels per acre were 43 bushels per acre below the estimate in May. we cannot afford that this year. I mean, that's part of the reason you talked about hogs last time I was on the show, and you know, the hogs is just another way to market your grain.
Yeah.
This is going to be a very interesting situation, and hopefully the weather's going to start getting a little more normal, at least in the U.S., and help us out, because we can't afford to have that kind of a miss in our yield this year. I mean, we just can't. And the corn prices are, yeah, they're great, but if you divide corn into beans, you know, it's 2.3, less than 2.3. Well, you'd really need around 2.5, 2.6 to really get these guys to switch. And there isn't that much seed to switch with anyway. So it's going to be an interesting situation. And I think Bill Gary might be right. You know, we ain't seen nothing yet.
Yeah, that's true. We could easily surpass the old 850 corn that we had a few years ago, and that would really be it. Rich, we have a question from one of our listeners, Rich, about farmland. Do you have any feedback on South Dakota farmland? I know we don't have much farmland here in Tucson. We got a few cacti, but that's just for mating mescal. But what's the story on farmland? I heard that it was up 30, 40% in some areas.
First of all, there's very little trades, and there's all these old farmers around to have cash, and when something's for sale, they're willing to pay cash for it. It's not like, you know, in the old days when they were borrowing money. And there just isn't much for sale, and if there was some for sale right now, it'd probably be going for 30 or 40% over, just like the housing prices are. But this is not a 1-year deal. This is a 2 or 3 year deal here we've got going on in the grains, not unlike 2010, 11, and 12. So, but they're going to be wide swings, and those swings can really, you know, wreck you. So control your risk. That's the main emphasis that I would have. You know, even if you use options as your risk control. I mean, there are a lot of ways to do it.
Yeah, well, let's make that. We have one more question for you, Rich, and then we'll let you go. And that's from a listener in Philadelphia, and he's asking, are you involved or do you know anything about the blockchain or cryptocurrency markets?
You know, we got on that early a couple of years ago when it took off, and then it got up around 20, and we got out. And then we looked at it back when it was about last fall, when it was about 12, and it looked like an opportunity. Your good friend Jeff actually bought it in the 12s, and then he bought Ethereum after that. And frankly, you know, he's been involved in it. We haven't. I still believe the central banks are going to put the kibosh, or give it the best try at putting the kibosh on it. And if they're able to do that, by the way, that'd be very helpful to the precious metals. And you know, gold copper ratio is one that the guys have looked at for years as some indication of inflation. And, you know, obviously copper's gone straight up, and gold's, you know, not even close to playing catch up to copper.
Wow,
but I wouldn't be surprised if you saw a corn pattern similar to what you had in lumber. You know, we had a very big correction in lumber here within the last 12 months, and then it went to new highs. So keep an eye on it. It's going to be wild. 1600
lumber. Hey, thanks for joining us, my friend, and be safe over there in Minneapolis. Right. May God bless.
Right.
We'll be right back, folks. 877-927-6648.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I wanted to mention the fact that I put the chart of copper up there. That's a daily chart, $4.59 a pound. It looks like we're heading up to $4.62. That's the 1.618 expansion with the breakout that we're having in gold and some of the other things. You know, it makes it look like these things are moving. You can see here what happened in the gold market here this morning, folks, when we were once we broke above those old highs at 1790, we'd hit it 4 times, and then boom, away we went up, and we went up to the 50% retracement. So far, right now, it looks like we could be going a lot higher than that. Another one that we've been watching very closely that fulfilled the actual ABCD pattern today was in the silver. We got up to that 2760 level in the July silver, and that completed that ABCD that we've been looking at. So those have been completed. The only thing I can say about the gold, folks, is I'll be checking that open interest tonight, because if the open interest in gold and silver fell today, that's going to be a very, very negative thing in gold. I don't think that it would have, not with that much buying, but you never know. We got to check those figures tomorrow, because if prices go up and open interest drops, that's short covering, and you don't want to stand in the way of that. That can be a really, a really volatile thing. Well, let's go to the stock market for just a moment here, because I posted something. I don't trade stocks very often, but I was looking at this pattern here in the Goldman Sachs, and I thought it possibly might open unchanged. It closed at 37.62. It opened at 360.10, and then we went up to 362 or 361 something. I don't know where it was, but if we sold at that area, what you usually do is you take 2% of the value of Goldman Sachs, which would be 7 points. Well, I don't want to risk 7 points when I've got a perfect ABCD pattern here, folks. So I would use a $3 stop on this, and that's what I suggested. That would put your stop up around 364. But look at this. It's absolutely perfect. They fail, of course, but look at this. It's absolutely perfect ABCD. You've got 11 days up in the A leg, 11 days up in the CD leg, makes a new high, could be a double top. Maybe it's going to be 127 extension, but this is what you're looking for. Plus, the matter of fact, if you look at the volume on it, the volume was not really very much. I mean, it was about half of normal, which is in fact a pretty big surprise. But like everything else, sometimes they're going to fail. The most frustrating part that I've been going through, and those of you that follow me on 24/7, is we had a perfect buy in the euro, and we miss it by I think we missed that by 6 pips, $60. We missed the low in the Treasury bonds by $90, 3 pips, and we missed the gold market, and by $2. We tried to buy it at 17.52 and went to 17.54, and now I will take my tongue out of cheek and stop complaining, because sometimes it works that way. You just know, it's just the frustrating part, because I worry about, not worry, but I'm concerned about everybody here. We do well at TFNN, and sometimes we do better than any others. I wanted to go through and just to show you the differences in the market, folks. This is the Russell, where we were just the other day. If you'll notice here, this was a weaker than market stock. And then you'll notice what we did today in the Russell, of course, was we went down and we made a perfect 78% retracement here in the Russell. And that happens to be the one that we were short. If you remember when we talked about going short on Monday, believe it or not, this is Thursday, and it's got a big profit in it. And look at the people that might have been in the Dow Jones. So the S&P still okay. The NASDAQ would have made a great deal of money, because that thing fell like a rock. If we get up here, look at the NASDAQ. I mean, this thing has not even gotten above the 382 as yet. So my assumption is if we get above the 382 in the NASDAQ today, and if we break out on the upside above those previous highs in the Russell, I will just say uncle and take a profit and stand aside, because these markets are very, very wild. I mean, they really are wild, folks. Wilder than, like I mentioned, I haven't seen anything like this in a long time, which I knew was coming. This volatility is it's actually a good thing. So we need to pay close attention to that as we look at some of these things here today. So those are a few things that I think that we need to focus on that take ourselves. As far as the dollar, the U.S. dollar started to weaken. We didn't quite get to the 382 in the U.S. dollar. We missed it by about 10 pips. That was equivalent to the pips that we missed on the euro on the downside. And you just can't get any closer on that. That's really what you're trying to do. One of the questions that someone asked me is, what do I do when I'm looking at markets like this? And the main thing that I do is I watch go down to a 15-minute chart. Folks, we're seeing moves on a 15-minute chart that used to take a day or 2 days to complete, and we can see those. Look at the S&P, folks. I mean, S&P had a monster move today. Look at this. Today's low, coming down exactly right to the 618, comes in at 41.43, and the low was 40.40, and now it went all the way up to 31.78, I believe, 41.78. Still in the downtrend, but that's had tremendous moves, and the Dow Jones has made new highs. It's gone past the 1.27 expansion, and that's due to stocks like Goldman Sachs and some of the others. But look at Apple, folks. I mean, those of you that look at our Apple chart that we usually bring up, I don't have it today, but it's hardly budged. It's trading at about 127, 128. It should be trading at 145 or 150, given everything else. Let's just take a look at Apple as we watch this today. I mean, it's done a perfect move. You see that big move up there. We were expecting that. That was a 78% level there at 138.75. The high was 139.30. We come all the way down to 126 and change. And what was it? A perfect 61% retracement. We haven't taken that out as of yet. and that completed a perfect ABCD. But here again, I mean, look at what the market's doing, and Apple's not doing very much, and that's the most widely held of all the stocks, which gives me a little bit of concern about how it's going. But I know so little about that. I don't even know if the uptick rule in shorting stocks is still valid. Do they still have that uptick rule that was part of the laws that were passed back in the 30s, 38, 39? The Glass-Steagall Act, do they still have an uptick for I don't think they have it for ETFs, but maybe they still do for stocks. That I'm not sure of because I don't trade either one of those, and someone asked me that question. Duffy's just told us that they don't have the uptick rule. The uptick rule was put in 38, I believe, because during the big crash of the Depression, you could just sell a stock at a lower price. So as it started to go down, you could just keep selling it. But when they brought in the uptick rule, the only way you could sell it short was if it was an uptick. In other words, that was the only way you could get it off, and that's pretty much it. Yes, it was eliminated by our very close and dearest friend in 1990, whatever it was, William Jefferson Clinton, and so we'll keep an eye on next rules that come up, and they'll be changing those, of course, as we go through and look at some of these also. Okay, we'll be right back. 877-927-6643.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look here at this is my chart of the S&P 500 2-minute. The blue line is our neural network artificial intelligence program. As you can see, that it had a very nice fit so far. Of course, we're up at this level. Any new high now, if we get about 1482, 4182 would tell us that this has flipped and it doesn't work. But for the early part of the morning, it was just absolutely perfect, especially down there in the bottom when you were setting right at the 61% retracement at 4143. That's what is important when we're looking at. Unfortunately, it doesn't work all the time, but intraday you'll get a couple of really nice setups. This happened to be one of them, and I went short at that 78 level, went down, made the first objective of 5 points. And now I'm out of the market and taking a look at it. I've been asked to take a look at something I know absolutely nothing about because it's in the news quite a bit. And this is this thing called Dogecoin or Doggy Coin, whatever it is, but this is equivalent to a penny stock. You can see it was a nickel down here just a few days ago on the 12th, and of course now it's trading up at around 70 cents. So it's moved 12 times in a matter of just a few days. Of course, that's more than you can get at in the bank. So I guess that's a good thing too, folks. There's a lot of things on the pink sheets, the penny stocks that they trade, and believe it or not, they follow the numbers incredibly well, as they should, because if the public is trading, these numbers are going to line up, relatively well. That's the way the cookie crumbles, as they say in the trade. So those are a few of the things. Now, I did want to talk just a little bit about. I wanted to double check here what the FANG stocks were doing. So if you'll bear with me here 1 second, I want to get the FANG stocks up. It'll only take me a second, hopefully, if I can do the right thing. He'll get to the layout, and then I go to FANG, and where are we? Here we go. We'll get these in here. There we go. I wanted to see how these are doing, and just to show you the patterns that we're looking at and what they're looking at. So that's the main thing, because these used to be the leaders. They're not so much the leaders anymore, but that's what we're seeing right now. Here's Facebook. As you can see, it's up. Oh, did I hit the wrong file on that? Yeah, I did. Shut the front door. Sorry, boys and girls. That's my fault. Oh, not good. Not good. All right. That's what happens when you try to give an Italian an even break. Okay, here is Facebook. You'll see it made a 3 drive to a top pattern up there. The 330, we've come down to about 317. We're up a little bit today, not doing very much. The one I really wanted to check, of course, was the Amazon, because that had this massive double top here. And I still believe that this is a major top in Amazon, bouncing a little bit today. But this is a chart that I don't do stocks, folks, but the patterns count. And I know a lot of you folks do. And that's why, I send them in. That's the first time I put a recommendation on a stock this year, was in Goldman Sachs, especially with that type of pattern and gapping up. That's an ideal situation. It might not work, but that's what you're taking a look at. Here's another one that is not acting nearly as well as some of the others, and that is the car that you can't hear, and that happens to be the Tesla, which is lower on the day, but it's actually come back much more than what it was. That was down about 15. Also, if you take a look here, another one that we wanted to look at here is Microsoft. And you'll be able to see here that it had that big ABCD up. It's been about 8 days down now, and it's finally having a little bit of a bounce. So maybe the thing is going to be taking a look at. Let's just move over here. Now we're going to take a bird's eye view here of Apple, because this will be one that is going to be interesting. You'll see we went down, made the 50% retracement, which was the ABCD there at 127 and change, and now we're trading at 128.80, and it hasn't bounced at all. I mean, it's really falling far behind. And of course, here is the one that we really felt was going to be really negative, and that is our good friend Netflix. And if you take a look at it, you'll be able to see that we couldn't even make a 382 retracement 5 days ago, and we're starting to go lower and lower. And even, believe it or not, folks, believe it or not, Google has actually had 3 down days. I think that's the first time since Hector was a pup. But anyway, this thing is still made a major top up in here. That's what I'm looking at. The fact that the Dow Jones is leading the market is not surprising because it's only a few stocks. You're talking about expensive stocks like Goldman Sachs and Transamerica and Visa and Caterpillar. All these stocks are, very, very highly priced, and it's a price-weighted average. It's a very, very nasty way to look at the market, but unfortunately, that's what the Dow family wanted, and so no one can change that because they own all the chips, and it's not going to change anyone. Now, someone asked me to share a horse story. Okay, I will tell you this was about, many years ago at Hollywood Park, and we were there at our usual day, and Tim Conway, who was one of the regulars, was having a horse. He had his own horse. He had actually 2 horses, and he had a horse running that day. I think the name of the horse was Emerson, and the horse was in the program at about 16-1. And he was on the board with coming to about 4 minutes to the race. He was about 20-1, and Vince Edwards was asking Tim, does this horse have a chance? He said, I don't like to talk about it. I don't like to talk about it. It jinxes me. It jinxes me. And so, we just stopped talking about it. Okay. So 30 seconds before the race goes off, Tim Conway stands up and he says, if this MF doesn't win by 8 lengths, I'm going to either sell it or shoot it by the end of the day. And of course, the horse did very, very well. Well, everybody at the table made a bet on it because it was his horse. It went off at, I think it went off at 18-1 or something like that, which was a good price. But he never used foul language, so it was really hilarious. And I was watching him on TV last night. He was doing a segment from I forget which one it was. FBI Files or whatever it was. And anyway, I was thinking of him, it reminded me of him, but he's a great guy. He's just very, very quiet, kept to himself a lot, but he was really a lot of fun, as was Don Adams. They were good buddies, and I also I hung around a lot with Don Adams because we played poker together. But anyway, it was just fun to see some of these guys. I look at these old movies, and I'm watching them with Sarah sometime, and I say, oh, look at that guy, look at that guy. And of course, I had a tremendous library of pictures with autographs. And unfortunately, it was destroyed during the time of the DIVORCE. Let's move on here to the next one we want to talk about. Give me 1 second here. Someone's asked a question about Mickey D, and I will get it up here so we can take a quick look at it. Mickey D is actually having a slight down day to day. Hard to believe. We'll get it up here so we'll be able to look at it. Hold on 1 second, and we'll be right here. 877-927-6648 if you have any questions, and I will be happy to answer them if I can. So that's what we're watching so far. We're going to take a look at some of the foreign currencies when we come back from the show at the main break, and we'll be talking about tomorrow. Our guest will be Shane Smolian, and believe me, Mr. Smolian has moved into the major leagues, folks. He's been brought up from AAA, and he's going to the show. He's been selected by some really smart people to do some big things, so we have to keep him in the hunt. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, folks, I'll do the dollar index after we handle the natural gas. Folks, if you're new to futures, I highly recommend to take a look at the natural gas contract. It is one of the very best things to trade. The margin is small. The moves are very, very good. The volatility is exceptional, and the fills are terrific, with this electronic trading. It's amazing. Within $10, I mean, it's just that your stops don't get slipped very much at all because it's good quality. The way that the market handles the patterns, you can see the 3 drives to a top there on the left. Then the market comes down with a 3 drive to a bottom right at the 61% retracement, then begins to fill a head and shoulders pattern just absolutely perfectly. And if you notice the right shoulder higher than the left shoulder, you have to have that in order for it to be a head and shoulders pattern based on Andrew Lowe's book. And then the market goes up and makes a 3 drive pattern on the upside, double top, comes down, stops at 786, the last support of the low from December the 28th, and we stay there twice over a 2-week period. Then we rally up to where we were last week, right at the 61% retracement. And as Shane Smolian pointed out a couple weeks ago, that there was a very strong seasonal for natural gas to start down in late April, early May, and that so far is what's happening. So it's really good. Look at it. I mean, it's far better to trade than the S&P 500 because the S&P 500 and is can have you sometimes have to take, what do you call it? What's that stuff for when you, whatever the people that get, I can't think of the word. And I'm a pharmacist. I can't remember. Sedatives, sedatives. But you don't need that with the natural gas most of the time. Sometimes you will, of course, but that's what we're paying a close attention to here as we look at some of these things here today as we watch these things moving up and down. Okay, now I wanted to mention one other thing. We did have the soybeans get into new high ground. We the old high that we had in beans was up around 1562. The high today has been 1569. We're trading at 1565, which is sort of disappointing from my point of view, because usually when market goes into new high ground, it explodes in that direction, and that makes it something that is a little bit harder for people to look at. Excuse me one second, folks. I'm trying to change something here so that I can look at something just a little bit differently. And if you'll bear with me one second, I wanted to stop and see where we are. Okay, that's where we are. Let me get this. Okay, there's where we are. Okay, moving on here. Okay, let's move this out. And I've got to do a little house cleaning here, folks. Otherwise, when I get my trade setups, I don't want to get too confused as what I'm looking at. Okay, now let's take a quick look here at the euro. I want to get this up here because we were trying to buy it down there, and it just didn't get bought. It just took off, and there was nothing we could do about it. And that's one of those things, folks, that you just can't have any control over. But look at the pattern that we had there. It was just absolutely beautiful. We had that was a perfect 38% retracement, folks. And I shaded it by $50, 5 ticks, and I still missed it because the low was 86, and I was trying to buy it at 80, and the number I was looking at that was just a little bit below 80, right around 7-8, and so I missed it by a couple ticks, and it's rallied well over $700 so far. So the way I handle this now is I will go down to a smaller time frame, and I'm going to do that. I'll just move down to a 15-minute, and then I will get this blown up a little bit so you'll be able to see it. And then what I'm going to do is I'm going to draw this in, and I'm going to put it in here to take a look at it. And I'm going to draw the line in so you folks can see what I'm doing. And I'm going to draw the line. Now I'm all ready. Here, I'm getting ready to bring this up here. This is how I'm going to set this up. I'm looking for a 382 retracement of the range between Wednesday and Thursday. Now, I'm going to buy it at 120.40. Now, I wanted to buy it way down at the bottom there at 198.50. Now, what happens now? What if it gets there? If I'm going to buy it here, down about another 15 pips today. If I buy it there, all I'm going to do is risk 12 pips. Because if it goes beyond the 50% retracement, I don't want to stand in front of it, because then it has the possibility to go down and make that third drive to a bottom exactly where I want to buy it on the 382 retracement. So that's what I have to do. I've got to go in and use multiple structures in order to get in the market to line it up. So I'm hoping that's what we're looking at as we see these things, but you don't always get the things that you like to see. So this is the main thing that I'm looking at today in the euro. As far as the gold market, if you had to put a gun to my head, and you don't have to do that because I'll do it myself. I don't use the guns, of course. I don't use whiskey or wine. Well, I used to use wild women, but now I don't remember why. The gold, it just hit that 50% retracement. Silver hit an ABCD pattern, which I love very much, and there's a lot of emotionalism. I will not touch the gold today, because all I'm going to do is I want to look at the open interest, and if the open interest increased dramatically in gold last night, and I mean dramatically, we've got to have a couple thousand contracts in there to get that kind of move. But if we didn't, and if we had a big drop in open interest tonight around midnight, I'm going to be sending it out as a heads up. And I'm going to say, okay, we've got to reverse our position. We got out all of our longs at 1778, and I missed that last $40. Let's try it again. The last $40, I missed that. So, unfortunately, that happens. We had a good run in gold, both up and down over the past few months. We missed a few good ones, but like they say, you're going to have to can't get them all. That's pretty much it. I do appreciate the comments that you folks send me by email, and it really, it makes me feel. And also, if you got some complaints, do that too. I'm doing the best to get these things out a little bit faster. Hopefully, we're going to get that done here today, maybe even tomorrow, to be able to see if I can get the charts out a little faster, and that's the main thing that I really like to see, if we could get that out. So that's mainly it. Okay, now let's take a quick look here at this E-mini S&P, see if we've held that number up there. Yep, we sure have. And it looks like, see, we've hit it twice now. The 61% retracement of that move came in at 41.78, and we hit it twice. Now we're trading at 41.74. So that's what we're paying attention to as we look at this. So keep in mind, that's what we're watching. I'm also watching for a potential top here in the corn and the beans. And the reason why is the whole world is so darn bullish. You know, there's got to be a place. I realize that I haven't been able to do that, but I'm going to do it right now, Mr. Studio, Mr. Al. There's the S&P that I'm looking at. I didn't invert this. You see, when I was early this morning, I knew that this was a mistake. As you can see, the blue line was the overnight market. So what I have to do now, this is what I was trying to do it before I was so rudely interrupted by my good friend Al over at TFNN, who does a fabulous job, by the way. Let's get this up. Thank you very much, Al. Now here is the same thing inverted. In other words, it's the mirror image of what it's looking at, because what this is a time vibration. And what you have to do is look at that blue line for time. It has zero to do with price. No price action at all is involved. It's all about time. 877-927-6648.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Okay, folks, I'm back, and I've been asked to, describe, why I've been bearish on these markets since the 28th what day was it? 28th of April, when we had that big super full moon. And I've put this chart up so many times, I'm almost afraid to put it up again. But this is the New York Stock Exchange Index. We've been here 2 weeks in a row now, exactly at that 1.618 expansion. And this means something to me, folks, because it's a 3 drive to a top pattern. We're seeing massive divergence between the NASDAQ and the Russell and the Dow Jones Industrial Average. So that plays into it, because you can't use the Dow as an indicator, because these are price weighted. They're not cap weighted. You can see the FANG stocks have made some type of a top a week or so ago. So that's all the stuff that I've added together. Now, with volatility that we're seeing today, that's not unusual. And part of it is caused, by the commodity markets. We got, corn making new highs. Wheat did not. But corn made new highs. Beans made new highs. Soybean oil did not make new high yet. It's still early. And the soybean meal, of course, is still quite lower. But these all add to the emotionalism that's in the market. So that's why I keep a close eye on it, and nothing else I can say other than that. So I hope that gives you some indication of what we're looking at. I had one other question that someone asked me, and I sold the thing about the S&P with the AI. They wanted to see what the gold looked like, and I'll get up here and I'll show you this. As you can see here, this is where we can't wait that. Say again, Ruby, please. I don't know what you mean about the Russell. Is that what you're talking about? I'll put this Russell up here. Here's what you need to do, Ruby. Just look at this. This is the Russell. There's the Russell right here. I don't know where it's trading now. The last time I checked the Russell, this was a couple hours ago, it was trading at 22.19. I assume that the Russell is higher than 22.19 now. But if the Russell exceeds the high of yesterday, I would just take the profit and stand aside. That's what I'm going to tell the folks. We'll be right back, folks, tomorrow with our guest, Mr. Wolf Trader himself, Shane Smolian. May God bless.